No, I'm in the camp that it's transitory. The best example that we've been given to people is pretty much like when you see a new blockbuster video coming out for the first time, let's say Star Wars. And that night, opening night, everybody's standing in line and they're paying a premium price to go see the movie. A couple of weeks later, there's no lines and you can see it anytime you want, at any place you want to. And then a year later, you stream it for $3.99 to your home. And I think that that's exactly what's happening. You have all consumers simultaneously coming out of spending hibernation, spending on the same things. And I think the best example I can give you right now is travel. I mean, if you want to travel this summer, you're going to pay a premium price, whether that's hotels or airfare. But I think once we get to September, when children are back in person schooling, I think that's when you see prices start to come down. So I just think this is a digestive period as we're all looking and spending on the same things.
All right, let's talk about Chair Powell a little bit, Lindsay, and what you might expect him to say tomorrow. My impression is that you would expect him to be resolute in saying that this inflation little spikelet that we're seeing is transitory, number one. Number two, you would expect him to be resolute in saying that he is going to continue the stimulus as is for the time being, or for the foreseeable future, or for whatever time period he suggests. Let me ask you whether you agree with that and whether you think that the continued stimulus is called for, given the way the economy is performing.
Well, there's two parts. First off, I do think that the chairman will reassert their assessment that inflation is transitory, and they'll be pointing to some of the categories that we saw in consumer prices, some that are less impacted by the virus, so rent, medical care services. These prices were slowing their ascent, so already we're starting to see evidence of exactly what the Fed predicted in terms of inflation continuing to rise, but again, expecting that to slow its ascent going into the end of the year. The second part is policy implementation, and the Fed is going to be, the chairman is going to be very clear that the taper process is going to be very transparent, very deliberate, very slow, and that they're going to begin to have that conversation in the coming months when it's appropriate, giving the market ample time to digest an eventual decision to taper. And we do expect that to come by the end of the year. So it's very likely that the chairman begins to open the door for that initial conversation, which could occur in the August-September timeframe. Now, going to your question of whether or not this current accommodation is appropriate, the chairman is also going to have to reconcile the fact that the economy is gaining significant momentum and that the labor market is improving substantially. But again, here too, I think the chairman is going to acknowledge the improvements that we've seen, but really focus on the glass half empty, suggesting that the recovery is still far from complete, with million Americans still out of work, yet to be put back to a position of gainful employment, really supporting the notion that accommodation is appropriate for now. But again, they're going to slowly move down that longer term path to eventually taper, and then even further, eventually to that first rate increase.
Shepard Smith here. Thanks for watching CNBC on YouTube.